Apple stock is trading at $232 right now. It's basically flat over the last year, well, up 2.5%, while the rest of the Magnificent Seven up double digits. So here's the question. Has Apple finally hit a ceiling, or is this calm just a setup before their next big run? On paper, the business is still a monster. Last quarter alone, Apple pulled in $94 billion in revenue, up nearly 10% year over year, and earnings per share up 12%. And don't forget, Apple, they're not just an iPhone company anymore. With Vision Pro and the rollout of Apple Intelligence, they're trying to turn your iPhone and Mac into full-blown AI platforms. Plus, when you control both the chips and the ecosystem, every new device sold just feeds the service's flywheel. But here's the thing. Despite all of that, the stock is lagging. It's underperforming every other Magnificent Seven name. And regulators in the States and Europe, well, they're circling around Apple's App Store, while competition in China is heating up fast. So in this video, I'm breaking down why Apple's numbers are booming, why Wall Street isn't fully buying in yet, and the one catalyst, the upcoming iPhone 17 launch on September 9th, that could flip the entire script. My name is Rick Orford. I've been trading since 1999, and I'm not a financial advisor. That's a good thing because I'm not here to sell you some expensive insurance policy. I'm here to show retail investors like you the real numbers, the risks, and the upside. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So, is Apple about to wake up and run with the rest of the Magnificent Seven, or are we staring at peak Apple? Well, for that, let's find out. Apple is a company that probably doesn't need much introduction. They design, manufacture, and sell fully integrated hardware, software, and services. They're known for their consumer electronics and software such as the iPhone, iPad, and Apple TV, which are now powered by in-house manufactured A-series and M-series chips designed to support iOS and the Mac ecosystems seamlessly and exclusively, further emphasizing the company's famous walled garden approach. Apple's products are so popular that chances are you're watching this video on one of their devices, and it's by no accident. Apple builds their ecosystem like a velvet cage. Once you're in, it's hard to leave, and investors, they love that. The company is also diversifying their technology. In 2024, they released the Apple Vision Pro to provide consumers a way to blend application graphics with the physical world. This headset enables users to navigate the real world, enhanced by the conveniences and capabilities of Apple's augmented reality technology. Apple isn't just selling tech anymore, they're selling the future, and they're trying to make it addictive. Apple's first of 2 main revenue streams is products, which includes Vision Pro, iPhones, Macs, AirPods, and others. The other one is services, which covers App Store, Apple Music, and iCloud. The business is operated by geography, with large markets in the Americas, Europe, China, Japan, and Asia Pacific. This allows Apple end-to-end control, taking their name from silicon to software services, supporting the success in maintaining recurring high-margin revenue. In June, Apple unveiled an upgraded version of Apple Intelligence, which is an AI that helps more sophisticated writing, imaging, and offers digital assistant tools across their entire product line. Products like the iPhone and MacBook are equipped with A-series and M-series chips, which provide users with processing power strong enough for use cases such as live translation and visual intelligence. And that's the secret to Apple's success, quietly transforming itself from a hardware giant into an AI platform. But is it enough to keep the stock climbing? The push for AI is also reflected in their stock. And to follow along, simply scan this QR code. As of today, Apple is trading at around $232. And if we take a step back, we'll see that the stock's been trading relatively flat over the past 52 weeks. Actually, is down 7% year to date. Apple is also trailing the rest of the Magnificent Seven, with all the other 6 members registering double-digit returns in the last year. And this tells me 2 things. Either investors are cautious about the stock, or they're simply waiting for the next catalyst to justify pushing the share price higher. And I think one might be just around the corner. But before I get into that, let's take a look at the numbers and see if the stock's flat performance is justified. Apple's latest financials, which cover its third quarter, fiscal 2025, were just released at the end of July. Total revenue jumped 9.6% to $94 billion. Remember, that's just for the quarter. And because of the improved numbers, Apple's bottom line grew 9% to $23.4 billion, or $1.57 a share. America is the company's top geographical revenue contributor at $41.2 billion. And no surprise here, the iPhone leads the category segment with $44.6 billion in revenue. These are monster numbers, record-setting, cash-generating, the kind of results that keep investors sleeping really easy at night. But here's the thing. When companies grow their bottom line 5, 10%, so does the stock price usually moves in line. And Apple's EPS, it was up 12% year over year, yet the stock price declined. How is that? Well, future expectations, investor sentiment, broader market conditions also significantly influence stock value. And Apple's results, well, they weren't as spectacular as Nvidia's or Microsoft's or Alphabet's, which could be why Apple stock is trailing against its peers in the Magnificent Seven, at least on paper, though the business, it seems to be still firing on all cylinders. So what's keeping Apple's success growing? Well, the short answer is services and AI, and both of them seem to be on fire. Now, Apple used to be known as the iPhone company, and I think in just a few years, I think Apple is going to be known as their services company, because services revenue continue to plow record high numbers and power the bottom line. There's also Apple's walled garden approach, meaning strong device sales can further strengthen its services segment, and vice versa. And that flywheel effect means more iPhones equal more App Store revenue, and more App Store revenue equals more iPhones sold. If it can maintain this growth, the company will continue to have substantial, steady, and a high margin source of income from its loyal customers, which it has in abundance. Apple is also releasing private, on-device AI upgrades that change the way users experience their technology. These not only include upgrades to Siri, but also writing tools, imaging features, all allowing users to expand their own capabilities with Apple's consumer tools. And Apple, they didn't forget about the developers either. They've opened up access to the on-device Foundations Model LLM framework. Third-party companies can now design tools for Apple users. And that fuels volume in both device upgrades and the services segment that spans multiple product cycles, practically ensuring repeat customers from both consumers and developers. And finally, I think Apple's biggest strength is their brand. Few companies in the entire world can command the same kind of loyalty and trust. Once you own an iPhone, you always own an iPhone. And as an Apple user myself, I can attest, their devices, they just work. Many people love the ease and functionality and prestige of Apple devices, so much so that many customers even treat themselves as status symbols. And that kind of brand power gives Apple pricing flexibility, resilience during economic downturns, and a built-in customer base that's eager to adopt whatever it is that they decide to launch next. Speaking of upcoming launches, all eyes are on the iPhone 17's launch announcement event on September 9th. These events, they're basically Apple's Super Bowl. Part product reveal, part cultural phenomenon. And every time they dominate the headlines, ignite social media, and then set new sales cycles right there in motion. And with Apple's brand power, even incremental changes can spark massive demand. But the real question is, will the iPhone 17 be enough to push Apple's growth into its next chapter? Or are we hitting peak iPhone? Because every giant faces headwinds, and Apple's are real and looming on the horizon. First is competition. Apple might be betting everything on Apple Intelligence, but it's also stepping into a field where the game has already started. Of course, this isn't unlike what Apple has done time and time again in the past. But consider, Google still dominates search and is pushing hard with Gemini. Microsoft, well, they've planted their flags with OpenAI and they're weaving AI into Office and Azure. And then you've got a wave of startups moving at breakneck speed. The danger is that Apple's cautious, slow-to-market approach could leave it trailing in the very race that defines the next decade. And then there's the regulators. Governments everywhere have Apple in their sights. In Europe, for example, the Digital Markets app is forcing the company to open up iOS in ways that it's resisted for years. In the US, there's antitrust lawsuits that are also challenging Apple's App Store practices and overall dominance. And if regulators succeed, Apple could lose their gatekeeping power that fuels its services money machine. And when 25% of your revenue depends on that toll booth, even a small crack can turn into a flood. And then we can't ignore China. The Chinese market is a massive opportunity, but it's also becoming Apple's biggest vulnerability. Homegrown rivals like Huawei and Xiaomi are surging, while new data shows that foreign brand shipments are slipping. Apple is losing market share right in the world's most important smartphone market. And because China's got hundreds of million potential new customers, any volatility there can slash quarterly results. On top of that, tariffs and geopolitical tensions, they're hanging over Apple's hardware margins. And let's not forget, most iPhones, they're still assembled in China. Any new trade restrictions could drive up costs or force Apple to raise prices, which risks turning loyal customers away. And Apple, they're shifting production to India. But that kind of transition takes time, and time is exactly what its rivals are trying to take away. So here's the trillion-dollar question. Is Apple a buy today? Well, I believe Apple investors have plenty to look forward to. The iPhone and services engine maintains a stable cash flow, and Apple Intelligence is a clear catalyst for capturing a larger share of the rapidly growing AI market. But there's a catch. Momentum doesn't just erase the risks. The US and EU regulatory pressures, shaky demand in China, and a premium valuation that assumes AI upgrades could run smoothly could easily derail the story. Think about it. One government ruling or one bad quarter in China could wipe off billions of dollars in market cap overnight. Overall, I think Apple has a lot of momentum, but I'd rate Apple as a moderate buy because of its historical performance and long-term growth. And this suits long-term, steady growth, dividend-driven investors who want predictable profits and believe in the growth of AI. So that's my stance. Steady gains, not lottery tickets. But what do you think about Apple? Are you excited about its prospects, the iPhone 17, or do you think that the ongoing trade tensions might affect the bottom line? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe so others can find it as well. Well, folks, that's it for me today. Thank you so much for watching, and I'll see you next time.